Hey guys, it's that Dividend guy coming at you with another list video. Today we're looking at a article published by the Motley Fool, 3 Dividend Aristocrats to buy right now. So there's a lot to like about consistency, and with Dividend Aristocrats, that's exactly what you get. That consistency is there. The dividends have been paid for at least 25 consecutive years, which means every year for 25 years, they have not only paid a dividend, but they've increased the dividend. So if you would have just bought a share, sat back and held it for 25 years, you would have been getting paid more every single month. So that's really the dream. That's really what passive income's about, right? So to be able to be a dividend aristocrat, you have to be an S&P 500 member and have to have boosted the dividend for at least 25 consecutive years. So some of these companies are better than others. But there are 3 dividend aristocrats that you can buy today. So let's take a look at the ones that they recommend and see why. Abbott Labs has increased its dividend in December 2020 by 25%. This marked the 49th year in a row of dividend hikes for the big healthcare company. Abbott's new dividend now yields over 1.6%. Unlike many dividend aristocrats, Abbott's dividend isn't the main reason to like the stock. It boasts an impressive growth history. Its shares soared 26% just last year, fueled by great revenue growth. Their earnings growth is projected to be over 13% for the next 5 years. A large part of its success stemmed from its COVID-19 tests that quickly emerged as the leader in the new market in early 2020. Abbott now markets 8 COVID-19 tests under U.S. Emergency Use Authorization (EUA) program. Its COVID testing sales totaled $881 million in the company's latest reported quarter. Abbott has other growth drivers, though. The most important of these is the company's Freestyle Libre continuous glucose monitoring (CGM) device. Look for continued strong sales momentum for the product, especially with third-generation version of the device securing European CE mark in September. So this is a healthcare just behemoth. They did do a spinoff of AbbVie, which is the next company, but this just shows that how strong of a company Abbott really is. I know some people look at the dividend, the dividend yield, and it's only 1.6%. But with that, you're getting a really consistent growth stock for dividends. And the stock price appreciated as well, so that you get the best of both worlds with Abbott Labs. So I definitely would look into it if you're looking for a healthcare, if you're looking for a really solid player in the healthcare sector. Next, we have its spinoff, actually, which is AbbVie, which is the one that I bought. If you like Abbott Labs dividend, you'll love the company that spun off, being AbbVie. It was part of Abbott until 2013. It continued to increase its dividend every year. Its track record of dividend increases mirrors its parent company. But AbbVie's dividend yields nearly 4.8%, and it's much more appealing. AbbVie's growth prospects aren't on par with Abbott's, but still, analysts expect the drug maker to deliver an average return close to 11% over the next 5 years, which is great. Double-digit returns is awesome for annual earnings. That would be even higher, except AbbVie faces biosimilar competitive U.S. for its, So Humira's going to be off patent in 2023, and it's something that people are really worried about. But it already has 2 autoimmune disease drugs ready to take the baton from the biggest seller. The company projects Rinvoq and Skyrizi will generate combined sales of $15 billion by 2024. Its lineup also includes other products with solid sales growth, blood cancer drugs. In addition, the company's acquisition of Allergan last year allowed it to pick up some rising stars, such as the drug Vraylar and migraine drug Ubrevely. Ubrevely. Jesus, can't talk today. Drugs always, I actually know what they have in the pipeline. I just can't pronounce it. I've done a lot of research on AbbVie, and I liked it better than Abbott because they had the best-selling drug in the world, being Humira. But yeah, AbbVie is a solid grower. It did spin off about 7 or 8 years ago, right? But they've had phenomenal dividend increases. They have a great product lineup, and yes, the Humira thing is a problem for the company coming up here in the next few years. during the next couple of years. But I've held it for over a year. The dividend increases are phenomenal. It's one of my favorite and best. I think it is my best performing position overall. I bought it at about $72 a share, and it's over $114 right now. So it's one of those quality drug makers that really did benefit from the spinoff. It's one of those that really has taken off. So I definitely recommend looking into it and buying it again if you're looking for a really good dividend grower. AbbVie's a really nice pick. And next, of course, we got Johnson & Johnson. For healthcare, you can't really go wrong with J&J. So Johnson & Johnson isn't just a dividend aristocrat. The healthcare giant's 58 consecutive years in dividend increases qualify it as a dividend king. J&J's current yield is more than 2.5%. The company has a stellar dividend record, and it's a longtime favorite for income-seeking investors, which is true. A lot of retirees own this stock too. Investors appreciate the stability that it offers. It's the most diversified healthcare stock on the market, with multi-billion-dollar businesses in the consumer health, medical devices, and pharmaceutical industries. So not only does it have great dividend growth, but in order to back that dividend growth, they have multiple income streams that are diversified, and they're very big players in multiple sectors within the healthcare industry. Johnson & Johnson may not be the most attractive choice on the front. Analysts look for the company to generate average annual earnings growth of only 4%, which, if you guys remember, earlier they said it's 11% expected for AbbVie, and I think like 14%, right? 13% for Abbott. So this is like half the revenue growth. Not even. It's like a third of the revenue growth that they're expecting for J&J. But the consumer medical devices, they haven't produced immense of growth recently, while sales for blockbuster autoimmune disease drug Remicade continue to fall due to biosimilar competition, which is expected. But don't dismiss its long-term growth prospects. The company's single-dose COVID-19 vaccine could be a huge winner. J&J also has the financial strength to make strategic acquisitions to fuel growth. I doubt that J&J's growth will linger for far too much longer. Yeah, J&J is one of those that's just like a no-brainer for dividend-seeking investors. They've got multiple leading positions in the healthcare industry. They have future, potential for growth. They can pretty much buy whatever they want within the sector to make sure that they keep growing. So this is a no-brainer, sleep easy company. Out of the three, I'm in AbbVie, so of course I have to root for AbbVie, but that's the one that I would have picked. The yield is great. The dividend increases are well, well recorded, and I think that they have the most potential out of all three. But if I were to rank them, it'd be AbbVie, Abbott, and then J&J. So let me know if you guys own any of these stocks, and let me know if you're looking into buying any of them. Thank you guys so much for watching. I am long AbbVie, so that's the one I would definitely pick. Thank you guys so much for watching. Remember to hit the subscribe button on my channel, That Dividend Guy. Hit the subscribe button and the bell notifications so you don't miss any of my double uploads. Thanks, guys. Take care.